So I think the most ironic thing is I hate bookkeeping, and yet I've owned 2 accounting firms, and this is my second one. And I think a lot of that stems from the fact that the part about bookkeeping that I hated was that the complexity of bookkeeping doesn't really vary whether you're a small startup or a Fortune 5000 company. What the key difference is between the 2 businesses is the volume of transactions that you have to process. So you have the same complexity, just way more data entry points that you have to get through, and you have to also figure out how to parse it. So if I gave you a static list of 100 names, and I said, enter all these names into this system, you would probably be like, all right, well, you're gonna enter A through E, you're gonna enter F through whatever. But when data's moving and dynamic and happening all the time, that sort of parsing or divvying up of work gets a lot more complicated. And also then the reconciliation of that work and making sure that all the pieces that you divided come back together as a whole and nothing was missing also gets complicated. So in typical accounting, like 1 + 1 actually equals 1.75 or less than 2 versus, in a lot of venture-backed like software companies, it's 1 + 1 you want to equal 3. And so with that said, I decided to build a company to solve my own need, my own problem, or my own lack thereof education or understanding of bookkeeping. And I called that company Botkeeper because the biggest issue I saw in the accounting space was hiring and retaining good talent. For the most part, and I think I said this in the last talk, I'll do another quick hand raise. Who here wants to be a bookkeeper? Exactly. So no one wants to be a bookkeeper. So if you are a bookkeeper, it's probably a transitionary role. You're doing it temporarily. It's a stepping stone to a accountant, senior level accountant, controller, CFO, et cetera. That means that 1, no one wants a position that needs to be filled, and 2, people used to get trained on being great bookkeepers. That doesn't happen anymore. So you have a very large vacancy for this position of manual data entry or like brute force processing of data. And at the end of the day, though, in order to do great accounting and analytics and advising and consulting, you need bookkeeping to be done, because without the data in, you can't take that data out and then provide some sort of context or analytics to it. So what I want to do in today's session is basically walk through, I think I find a lot of speakers talk about AI. They talk about it like really, really high level. No one actually takes the time to dive into what is AI really? Like, how is it built? How does it work? What are the fundamentals of it? So today, I basically want to dive through that, explore how you build, how you operate, how you train and maintain AI, and then show you how you can basically deploy that in your practice. So step 1, hire engineers. Engineers aren't cheap, so be ready to spend millions of dollars hiring engineers to build your own AI. And you're all probably looking at me like, this is not the room I signed up for, because I am not ready to spend anywhere near millions of dollars building my own AI. And the good news is you don't have to build your own. You can license AI, and the real value you provide to AI is you train it. So you teach it to do the nuances and understand your practice and your clients, and that's where all the IP and the value is created. It's not around actually building the AI. Companies like ours can build AI because we know we're going to leverage it across hundreds and thousands of accounting firms and tens of thousands or millions of businesses. Companies like PwC and EY can build AI because they have very large budgets, and they do support enough clients that they can look at like very particular things to automate away and get the ROI that they need. So find or hire those engineers. 2, find an accountant. 3, prepare a computer. Basically, you need to find a computer or some sort of computing stack, server, et cetera, that's going to be able to process the machine learning algorithms that you're running. So if you've ever seen me walk around with this brick, weighs like 20 pounds, it's not because I love dealing with an old piece of hardware. This is actually very new, but it has the compute power of 9,400 computers in this little bad boy. And that's needed in order to run the machine learning models that we process and operate. 3, and I will warn you, this is going to get very graphic, so if you're squeamish, this is a really good time to step out. You take the accountant's brain and you put it in the computer, and then it's alive. AI, that's it. I'm done. Thank you very much for the time. But in all seriousness, let's talk about bots. So two kinds of bots. You have mechanical bots, which are the actual robots, the physical beings that move about, do things, pick up stuff. And then you have software bots, which are just code. So like two look very, very different. Mechanical robots, they give a bad name to software bots. I'll see if I can pull up, oh, can't pull up that video. I'll pull it up in a second. But what's great is there's a video of mechanical robots, and a company in Boston actually built this robot to go and pick things up and put them down. Very simple task, except in the video, this bot basically goes and knocks everything over, tries to pick up one thing and doesn't, but falls down. So it's close to picking things up and putting it down, not picking anything up, throwing it on the ground and falling down in itself. And the problem with that is that's the perception that I think most people have of bots, is they think these robots, they don't actually do what people say they do. They claim a whole lot of things. Robots can be able to carry a whole lot of weight, be able to march into Desert Storm and take care and save us. But in reality, like, we're not talking Star Wars here yet or anywhere near it. These bots have a hard enough time standing upright and not falling over. Software bots, on the other hand, are way far advanced than what people think. So it's like the exact opposite conundrum. Software bots are already doing things like, there's a great video, and I would show it here, but I'm going to reenact it, so ready, get my acting skills together. There's a video of Google, and you can Google this. Google a video by Google calling and booking a hair salon appointment. And what's really cool about that is Google basically, someone says to their Google phone, hey, can you book me a hair salon appointment between the hours of 10 and noon? And Google says back, sure, no problem. Then Google calls the closest local hair salon on behalf of that person. So they didn't tell which hair salon to call. They just called the closest and most local firm. They interact with the person on the other end. So the other person picks up and says, like, hey, thank you for calling so-and-so. How can I help you? I'm looking to do this. And the bot, ironically, is like, I'd like to book an appointment for like a haircut. Person walks through, here's the different things that we offer, here's the times that we have available. They tell them, the bot tells the hair salon designer or the stylist that I want to do sometime between 10 and noon. And the stylist says back, well, we have 1 p.m. available. And the bot says back, no, unfortunately that won't work. I'm looking for something between these hours. Do you have anything available for this? Goes back and forth between, well, what would you like for a service? I just want a haircut, At the end of the day, it books a haircut at 11 a.m. for the individual that said, okay, Google, please book me a haircut between the hours of 10 and noon. And the other individual on the other end of the phone has no idea that the person they had been talking to, because they responded back in like very human form and even like paused or was like, and said all the things that like a human would, was not a human. And that's scary because now when people call you and book a tax appointment, it may not be an actual person booking that tax appointment. But that is where software bots are. So like software bots are way ahead of what people expect or realize. And to the point where if you were to go online and Google like a location or an address or a business, restaurant, and you know how it tells you the hours of operation? Want to take a guess how it figures out those hours of operation? The business owner does not enter their hours of operation. A bot calls every single business listed on Google and confirms on an ongoing basis what their hours of operation are during the week, on the weekend, during seasonality, holiday time. So there is someone literally calling this hair salon and saying, hey, are you open? I know it's the holidays and Christmas. Are you still open for business Saturday and Sunday? And that person responds back and says, yes, we are, but we've got, whatever, Christmas hours on Sunday, and we're only open for 2 hours. And then it updates Google. So when you search it and it says it's closed, that's happening in like a relatively real-time basis because there's a bot going out and calling all these people. So with that said, how many of you are afraid of bots? So if I didn't make you afraid, you should, like, leave the room because you should be afraid. These things are going to take over and essentially ruin our lives. But in reality, no. All bots do is they take busy work, mundane tasks, provide you with scale, provide you with efficiency, provide you with the time and flexibility to do the things you love. So like we all raised our hands, or didn't raise our hand. No one raised their hand, said, I love bookkeeping. Well, guess what? You don't have to do bookkeeping anymore because bots are capable of doing it. Which means all the time that you're currently spending on bookkeeping could be time you're spending on finding more clients, advising clients, working closely with clients, working with your family, spending time with your family, taking a vacation, enjoying a pina colada, you name it. And they're going to make you more profitable. So like, once again, who wants to make more money this year, next year? I know there's only a month left, but what's cool with bots is bots take hours to train, not weeks, so you could actually deploy bots before the year end and realize profitability or increase margins before the year is over. They're going to increase the accuracy, which means your clients are going to be happier, because why are bots more accurate? Well, bots don't do one thing that humans do, which is make random mistakes. Bots make consistent mistakes. So they will make the same mistake again and again and again and again. Just like that bot that tried to pick up stuff in the video I didn't show you and fell over, it did that same sort of try to pick up, fall over again and again and again. Software bots are the same. If it's not programmed properly, it's going to repeat the same mistake. Good news about that is repeated mistake is easy to pick up and identify, and it's easy to correct. Random human error is impossible to pick up, impossible to correct, because every time you correct it, someone finds a way to make some other mistake that you didn't just correct, or they wait 6 months to make that same mistake again. So they're going to be repeatable, they're going to be more accurate, they're going to not have the same sort of transcription. But like a calculator, if you put the wrong equation in, you're going to get the wrong equation out. Now you put the right equation in, it's going to tell you exactly what you're expecting it to every single time. So what is AI? So we talked a lot about bots, we talked a lot about automation, we talked about how they're going to take over the world. Reality, this is what AI is. So AI starts at data. And what is data? That's raw numbers. So imagine just taking some random set of numbers, putting it in an Excel sheet. That's data. So it has no context, no understanding. There's no information behind it, no analytics. There's no graphs, nothing that tell you why that data means anything. You apply meaning to it. So that basically means you take the data and you start sorting or filtering it or moving it into columns in such a manner that basically says, hey, the data set that we're looking at is purely for transactions, debits and credits that this client is like operating against. And not only are they debits and credits, but they're not prepaid debits and credits. So you start getting like a little bit specific. And that specificity actually provides context around the data and gives you knowledge around the data set that you have, such that you can now run filters or sorts against that data and start to learn. So what you're seeing happen now, or what you're seeing or hearing me explain, is how you take random data and you start making that random data more valuable to the end user or to your firm. And all the while that you're making that data more valuable, what you're starting to do is build the essence or the foundation of AI. Wisdom. So imagine if you took that data, you took the understanding, you know that it's categorizations, you know that it's not prepaids, you know that those categorizations are only for transactions that happen within this period of time. And now you say, well, these transactions or this Excel sheet needs to go here. And that here is QuickBooks, Xero, the accounting software. So how do I take transactions from one system, put it in the other system? Not only how do I take them from that one system and put it in the other system, how do I automatically categorize or classify those based on the data set that I have? The way that you do that is you start layering in AI and algorithms. So how do you layer in AI? Well, first you start teaching that data set using algorithms, which are just like x plus y to the square divided by so on and so forth. Now everyone who here loves algebra? Yeah, so that class that you took once and you hated, that's what makes AI. And you wonder why no one understands how AI works. except the few people that are nerdy enough or geek enough to love those algorithms. So you start providing perception, and what you're basically doing is you're taking that data and you're giving it context, and you're saying, what is this data, and why should it care, or why does it matter? Next thing you provide is you basically say, given this data set, I want to know something. So I want to know when a transaction is within a given range in terms of dollar amount, or a range in terms of day amount, like the day in which it was like processed or entered, or I want to know that the vendor is one of 5 vendors, or that somewhere in the memo says this word. So at this point in time, you're teaching the data to give you a notification of something. So you're basically saying, if I see this, then I do that. And all that is notify, make me aware. Then you teach that notification, should it notify me always? Should it notify me sometimes? Should it notify me in certain situations that, like if the transaction's $1 million and the business only does a few $100,000 a year, make sure you notify me that they just did that transaction, because it's either fraud or this is going to bust the company. And then what can I expect to happen as a result of doing that transaction, or as a result of that action that's taking place? And can I take that notification and make that notification do something for me? So it's one thing to notify me that a transaction has taken place. It's another thing to take that notification and make me aware, but then do something. So in that $1 million transaction situation, block that transaction from executing. What can I avoid? And this is basically prediction. So at this point in time, what you're doing is you're saying, given my situational awareness and my understanding of this data set, what can I avoid is similar data. So if you were to give me another data set, how do I identify similarities that I would then generate notifications for, that I would then take action for, that I would then basically say, in any situation, whether it's this data set or a future data set, if a $1 million transaction is attempted to process, block it. And I put, what can I avoid again? Because prevention. So and a lot of times, AI is really about preventing an action from taking place. It's like the security that's why AI, when it pretty much was initially launched, it was doing predominantly data security functionality. So most banks were using some form of AI long before we started hearing the word AI, because what they were doing is they were saying, anytime a user or an IP address from here attempts to get through our server, do this thing, which in most cases was block. And finally, what do I need to do right now? So it's one thing to notify me and make me aware that an action should be taken. It's another thing to know what action should be taken. But really, AI is only being AI when it's taking action, because we as humans are good at basically perceiving situational awareness or an understanding, and then enacting or acting on that understanding. So how do you tell AI to then do something? And the way that AI does something is through predominantly a Python script. And all Python is a string of code that executes a command against a piece of software. So in the situation where there's $1 million transaction attempt, in processing from the bank, the AI would identify that and say, one, I need to block this, and it would understand that it needs to block this because either there wasn't $1 million in the bank account, or two, this is an abnormal transaction that shouldn't be processed. And then three, what it's doing is it basically then goes and says, execute this command. And that command could be something as simple as send an email to the bank telling this person to block this transaction from being fully processed. And most AI, as it pertains to accounting, it's learn and understand what that transaction is, and then take action on that understanding. So it's a debit, this is an expense. What is my understanding of the expense? Which bucket or category should it go into? And how should I then treat it? Is it an expense that's already been incurred? Is it an expense that's about to be incurred? And therefore, this needs to go down a bill pay workflow, such as bill.com. is this a prepaid expense in which I have to book it as a prepaid, and then I basically have to debit against that prepaid, divide by 12 on a monthly basis, and then book those debits against it. So all those actions are the actions that AI is taking in this form. What AI is not. So oftentimes, and it's like a little frustrating, I talk to enough accountants and accounting firms where they're like, hey, are you using AI today? And they're like, yes, I use AI. And I'm like, oh, really? Like, how many engineers do you have? And they usually then go, oh, I don't have any engineers. And that's usually like the first tell to you're not using any AI. Because most AI, the only way you can actually deploy it is if you have engineers. Because even the AI models that you can license off of online or you can download still require engineers to actually like implement or make use of. Because the most complicated thing with AI is not the algorithms that process the data, it's the pipeline and the data cleansing of the data in a manner that basically makes sure that there's consistency in the data and that your understanding of what that data is accurate, and therefore the machine learning can take your understanding and properly execute against it. So Intuit, common misperception, in Intuit or QuickBooks Online or any QuickBooks or Xero product, when you tell it to always classify this vendor as this category, that is not AI. And so many people think that it is. So like, they're like, oh, I use AI all the time. I use Intuit's AI. Or how are you different than Intuit's AI? And I'm like, wait, I don't understand. What AI did Intuit roll out that I had no idea about? And they'll be like, oh, we use the mapping AI automatically. Because people, the misperception is automated action is not AI. All that is automated action. And more often than not, automated action is robotic process automation. But I wouldn't even say what Intuit does is actually robotic process automation. All Intuit's actually doing in that case is one-to-one vendor mapping. So what you're telling Intuit is every time I buy something from Amazon, it's food. Waiting for the chuckles because we all know that's false. You could buy prescriptions from Amazon, you can buy hosting services from Amazon, you can buy desks, video games, and food from Amazon. But that's what one-to-one vendor mapping is, that's what Intuit has, that's what if this then that is, that's what decision trees are, that's what robotic process automation is, that's what Blue Prism is, that's what Black Pond is. See the common theme here? Most things that we hear as automation and doing a task are not AI. They're just robotic process automation. Zapier is not AI. Once again, all you're teaching Zapier to do is take this and do that to it. Why is that bad? So like it may sound like I'm being a jerk and like being mean about Intuit or being mean about Blue Prism. I think they're great products. But the key difference between robotic process automation and AI is robotic process automation does this one thing you taught it the same way every single time, irregardless of changes that have occurred with the data set, with the software being used, or with the interpretation of that data. So for instance, that basically means you file taxes exactly the same every single year, irregardless of whether laws change. Does that sound like a great idea? No. Why? Because laws always change. Software always changes, data sets always change. Common theme there is robotic process automation is really good temporarily, or it's really good if you're a business that doesn't change. So what kind of businesses, does anyone here work at PwC, EY? Okay, cool. So now I can be mean. So if you work at a big business like that, let's just say we'll use PwC. If you work at PwC, they move so fast, right? They're implementing the latest technology, changing things, right? No, wrong. They don't change. They move slowly because they're such a big company. It takes a lot to actually move or change or adapt. Good news with that is companies that take a while to move, change, or adapt are great companies to use robotic process automation because they basically say, we invoice all of our clients this way every single time, irregardless of what the client buys from us. So we piss off a lot of clients, right? That's why you guys all have clients. So we do that, and We send them the exact same form every single time, and we've been doing that for the last 10 years, and it's this Lotus 1, 2, 3 form. So you have to like teach the RPA to like use that form. So it works very well in those cases. It does not work with small practices and firms that adapt, change, use new software, like adapt to clients, because basically if you want to use RPA, you can only use RPA on essentially a per client basis, because if I asked you, how do you invoice all your clients, is exactly the same way for every single client? Anyone here? Exactly the same way you invoice all your clients? Every single client, irregardless of anything? No. So you tailor it, and therefore that action cannot be automated with RPA. But it can be automated with AI, because AI's nuance, or the key difference between AI and RPA, is it's not automation, it's learning, understanding, and application. So it basically learns the difference between how you invoice client A from client B from client C. And it may not actually understand why there's a difference there, but it starts to see a pattern. Like, it sees the pattern that the timesheet comes in and you always discount client B's timesheet by 20 or 30%. It doesn't understand that client B is a friend of yours, or they're annoying, so you discount it and you just don't want to hear from them. All it understands is that every single time you apply some sort of discount. Now, really, really cool and intuitive AI starts to take that learning and then test against it. So it basically says, well, what if I discounted it 19%? Does that change things? Does the client get mad? Can I still send the same invoice? And what that like intuitive AI does, it basically asks the user or the practice owner, hey, would you mind if I send a 19% discount to this client? And God forbid they come back and they say, where's my 20% discount? I will immediately respond and send a 20% discount with some automated, sorry, I made a mistake, email. What's cool about that is it starts doing A/B testing and figuring out how it gets you more margin. And that's a key difference between AI. AI is learning and trying to adapt and improve the way you do things now, and also understanding the subtle nuances of how you do them. AI is not perfect though, because in order for it to understand and learn, it needs two things. One, it needs a history of you doing things relatively consistent, or even if it's inconsistent, if the inconsistencies are consistent. It's kind of like ironic or a conundrum that you do consistent inconsistencies, but we all know we do them. And the AI will pick up on that and then take action appropriately. But it will require training. So AI doesn't just like out of the box, I click the magic button, automated my business, I'm gonna go on vacation, have my pina colada. Like, you have to train it, but the training, what's really cool is like, who can tell me, like, keep your hand in the air. I'm gonna start like counting back in terms of like quantity of weeks that it takes to train a new hire on accounting or to like do bookkeeping for your firm. So we're gonna start at 4 weeks. Put your hand in the air if you agree 4 weeks is how long it takes for you to train that new hire, get them up to speed in your firm. 3 weeks? 2 weeks? 1 week? 2 days? 1 day? Oh, more than 4 weeks, okay. So, ironically, I was not trying to prove that point. I was starting at 4 weeks thinking that's a long time. What's cool, so 8 weeks, 12 weeks, we're gonna keep going, 16, 20, 24, a year.
6 months to 2 years.
So what's really cool is AI. Take a guess how long it takes for you to train AI to do a bookkeeping or a bookkeeper's job. Go, raise your hand, throw out a suggestion. Come on, someone.
2 days.
2 days? Anyone have any other suggestions? I can tell you it's lower, so guess.
2 minutes. 4 hours. 5 minutes. 4 hours.
4 hours. So somewhere between 2 and 4 hours is actually how long it takes to train AI to do the job of a bookkeeper.
Not just simple.
That is, you will, in 2 to 4 hours, you will teach AI all the nuances of your practice, the kind of clients that you use, the clients that you work with, the services that you offer, how you engage with those clients. And then it takes about anywhere from 10 to 30 minutes per client for you to teach AI the nuances of that client in particular compared to how your firm operates. Can anyone name the last time it took you 30 minutes to train a bookkeeper how to do all the work for a given client? Raise your hand if that's even possible today with people. No, it's not. This is why AI is so cool, is because what did AI do? How did it figure all that out? History. So in most cases, a business didn't start the day that it became a client of yours. And even if it didn't start booking stuff into Xero or QuickBooks until they became a client of yours, they still have history that lives in bank accounts and credit cards. So when you set up AI, oftentimes you link data sources, so credit cards, bank accounts. What's cool with AI is, unlike people who can see patterns in data sets that are this big, AI can see patterns in data sets that are like infinite. So you can connect Google Analytics, social media, banks, credit cards, payroll, benefits, bill pay, expense reports, timesheets, da-da-da-da-da. And the AI will look across all those data sets and understand the nuances that you alter the payment of payroll tax based on cash on hand. So it will learn those nuances, and we all know that we should never do that, right? But how often do companies want to do that? I think you had a question real quick?
Yeah, what is your definition?
But what you just said is it can't be learned until they actually do it. But how often is something that is done only the first time now versus it had been done in the past? So the learning that you're teaching, the only way you learn, or the only way you can say that this is how you do something, like our primal brain of, in these situations, do this thing. The only way we get that knowledge is by having done these situations and knowing to do that thing. If it's,
I'm just saying, to some of us, we have to really think, okay, it's not so smoothly.
it usually takes about, it takes 4 hours for you to train it to replace typical bookkeeper work, which is categorizations, classifications, reconciliations, bill pay, processing of expense reports, tracking or accruing revenue, tracking depreciation schedules. I can keep going, right? Everything a bookkeeper does, we can call it a full charge bookkeeper. What your definition in your mind of what a bookkeeper is the thing I'm actually talking about replacing with AI.
There.
Yes. So what's cool about AI is AI isn't AI and it doesn't work if it has no data. So businesses, what you'll find is the companies that excel at AI are companies that have been around for some number of years, or companies that have a lot of clients. So because in this case, the AI that's going to automate bookkeeping basically learns from the thousands of clients that it currently supports, but then learns and tailors itself to the custom nuances of that individual client. And I'll show you, I actually have a model that I'll walk through in a second. So what tasks should we automate? Let's do exactly what you just described, which is let's take an example of automating categorizations and classifications. So the first thing you need to do is take a data set. So just take a bank feed export, dump that into an Excel sheet, and then you're going to upload that into an AI model. And before you upload it, you basically map it. And what you're doing is you're showing that, okay, there's a lot of dots, and it looks like there's some sort of pattern here where there's a clustering of those dots in one direction. And then what you do is you basically tweak the data set, or you clean the data set, and you make sure that you get rid of outliers or the random situations where a business raises capital, right? So $18 million or $20 million coming into the bank account is not an everyday occurrence. It is a random situation, so let's not apply a lot of attention to that when we're building the AI model. Let's apply a lot of attention to the transactions that look relatively similar, which are bank and revenue transactions within dollar amounts that are perceived to be regular. Then what you do is you write an algorithm. Remember Algebra 1, Algebra 2? All you're doing is you're basically writing an X, Y sentence with some sort of calculations in it that says, if you apply this formula and you enter a number, every single number you enter is going to tell you an XY coordinate in this direction. And you make sure that 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 formula or that algorithm fits the normalized correlation of data as tightly as possible. So as few dots way below it, as few dots way above it. Next, you train and you retrain. It looks like I copied and pasted train and retrain because I was maybe training and retraining my deck. But you train and retrain that algorithm on those data points such that you then teach it the predictive nature that I described in like one of the earlier slides, such that when it sees data that looks very different, it's able to like look at that data and understand the pattern or the correlation of that data. So this would be like, for instance, these are all hosting vendors. So Google, AWS, Right Networks, so on and so forth. And what it's doing is it's spotting a pattern between certain transactions, either of similar dollar amount, similar vendor name. In reality, it's not really just looking at vendor name, because remember we all learned vendor mapping is not AI. What it's doing is it's saying, if purchased, if there is a negative transaction in a bank from Google, and that negative transaction says somewhere in the memo description, archive, and then it also is between the dollar amount of $150 and $175, and it occurred between the 1st and the 5th of the month, then I know that that transaction from Google is hosting. And how did it know that that was hosting? Well, human accountants, because we still need humans, like the bots aren't replacing all of us, they're just replacing who? Raise your hand if you love bookkeeping. Trick question, because if you raise your hand, you're getting replaced. But if you love accounting, you still got a job, because the accountants are the ones training our model and basically saying, hey, this is a similarity amongst Google and Right Networks and AWS, and this is a similarity amongst the dollar amount. This client should never purchase hosting services for any more than $150, and they always invoice between the 1st and the 5th of the month, so if it happens after the month, that's a weird situation. Maybe Google screwed up. You all know Google doesn't screw up. So find those anomalies, point them out, and then have a human look at them and make sure or figure out why it's an anomaly. But what is basically happening here is it's clustering similarities of transactions, and not similarities of vendors, similarities of strings of transactions. So it has to have multiple fields that look like another string of multiple fields. So what does this look like? So this is what it looks like for Botkeeper, which is my company, and the AI that we've created. And what you'll realize here is this AI thinks about transactions and categorizations, because once again, we're just doing an example of categorizations. This isn't the only thing our AI does. But for categorizations, this is how an accountant should think of categorizations. So the first ML model runs against the individual client and says, let me crawl through all their history and figure out where that individual client takes a transaction from Amazon with AWS in the memo field that's negative of $125 to $250 charged on the 1st to the 5th of the month. Where do they put that transaction? And what it learns is this client has always put, or 8 times out of 10, 7 times out of 10, maybe when they actually had someone that knew anything about bookkeeping, put it in computing as a bucket, right? That is the classification or the categorization, whatever you want to call it. We're going to call it classification because I think of categorization as a different thing. It's an abstract understanding. So that is the classification. And therefore, we know that we put a string of transaction computing into the computing bucket. So we store that. Then what we do is we look across all of our clients and we say, looking across all of our clients, whenever we've seen a string that looks like this, Amazon, AWS, somewhere between that dollar range, somewhere between this month of purchasing, what have our human accountants taught our system to interpret that to be? And our human accountants have said that's hosting. That is a hosting fee. So Amazon AWS is hosting. Same thing as Google Archive is hosting. Same thing as Right Networks Cloud is hosting, so on and so forth. And that when they see that string, now if it was Amazon AWS $5,250, it would probably say that's not hosting, that's data processing, right? Because our accountants would be like, you only spend that amount of money when you're actually processing data, even if all the other fields match up. And that's the human brain training it and telling our system what this thing is, which is hosting, and then storing it in another database. Now what happens, and here's where AI is taking effect, where AI is like teaching itself, is the first machine learning model, machine learning AI, interchangeable. You use machine learning to do AI, can't do AI without machine learning. So if you hear someone say, oh, we do machine learning, they do AI. If you hear someone say they do AI, they do machine learning. So the first machine learning model says, hey, this client classifies this string of transactions under computing. What is this transaction? And out of this database, it says, we know and understand that string to be hosting. And then it goes back and it teaches the first database that this client does not put Amazon AWS 125 to 250 between the 1st and the 5th of the month under computing, but rather it puts hosting fees under computing. Notice that subtle difference, or that like very, very important nuance? That's what accountants should be doing. Accountants should not be trying to take things that look alike and put them in like places. Accountants should say, what is that thing? And let me understand what that thing is, and then let me understand why I'm putting that thing in the place. Right? And that's what all of you guys do, and that's the difference between bookkeeping and accounting. So now that we've learned that nuance, we've taught our system to basically say, anytime there's a hosting-related expense, irregardless of whether this client has ever in their life transacted with Right Networks or Google or Tom Smith Hosting Company or any other hosting company, anytime this database understands that transaction to be hosting, it knows exactly where to put it. That is AI, because you didn't have to tell the system that you put this there, and you didn't have to tell the system that you put this there. The system taught itself that it put that is this and that this goes there. So what is machine learning good for? It's really good at consolidating data. So taking data from a bunch of disparate systems, which if you think about like the evolution of accounting used to be relatively simple. You had bank accounts and credit cards you took transactions from, and then you booked and classified them and generated reporting for your client. Then Bill.com came about, and so did Fathom, so did Receipt Bank, and so did all these other systems that basically said, here's one little piece of accounting that I'm going to try to automate. And I'm going to automate it and make you use this totally different system in order to automate that thing. Which meant all of you, who here has a tech stack? Come on, you guys have to have a tech stack. Use QuickBooks? Who here uses QuickBooks or zero? Right, you have a tech stack of 1 right now. Who here uses QuickBooks, Xero, and Bill.com, or Expensify, or Receipt Bank, or Fathom, or Flowcast, or I could keep going on, some other system in conjunction with QuickBooks? That's a tech stack. So in most situations, an accountant has now been tasked with taking what was just bank account and credit card data and now having to manage a dozen systems. One system for bill pay, one system for expense reports, one system for da-da-da-da-da. And that becomes a cluster, because now you have to reconcile all those systems with each other and get them to tie out with QuickBooks or Xero, and then also figure out, is the data in QuickBooks or Xero accurate, or should I look at Bill.com, and is what the data in Bill.com accurate? And if the two are different, which one do I assume is the master accurate data? So in an attempt to automate or help accountants be more efficient, we actually made it more complicated and cumbersome for accountants to do their job. So AI is really good at taking all those disparate siloed data sets and systems and pulling them all in and correlating and reconciling that data. It's also really good at doing if this, then that statements, but doing the if this, then that based on it auto-learning what the this is and what the that is, versus you having to tell it. Because if you have to tell it, then you're relying on it being the same every single time, every single way. Whereas if it's learning on the fly, it's adapting and retraining itself on an ongoing basis to know that the if this became something else and the then that became something else for a different system. And it's really good at seeing large patterns in large data sets. If I gave you 1 million transactions and said, tell me on average, show me a correlation between Google Analytics, visitor traffic, and dollar amount processed by that client, you could probably crunch that over a period of time and produce to me that, hey, for every visitor, the client generates this much revenue. If I didn't tell you even what to look at, and I just said, here's a large data set, show me all the correlations there, you'd have no idea where to begin. What's cool is AI is really good at basically identifying those correlations. And then AI is really good at speed and scale because this, 60 words per minute, is as fast as you can type or enter data into QuickBooks. AI can enter data light speed, like the speed of compute, which is basically just the synapse of that computer chip. So how do you build your own AI? Back to the point, spend millions of dollars, spend years, hire a big team, use that to save your firm money, and hope to God that it's going to have an ROI, that those millions of dollars will come back in your pocket. No, the answer is don't do that, because that can only be done by very, very large firms that have a lot of money and have very consistent things that they know how to automate. It can also be done by firms like us or other AI firms that build AI to service or to be leveraged by many companies, or many accounting firms that leverage it across hundreds of companies and therefore tens of thousands of companies. So in reality, what you really want to do is deploy AI into your practice and teach it. Because the real value in AI is around you teaching and training the AI to do the things that your accounting firm or practice do, and to do those consistently and accurately on an ongoing basis. That's how you create value in your firm. That's how you increase the valuation of your firm. Because if you can increase your margins, right, automate away manual data entry, or let's just say don't replace a single person. Just have a bot be the last bookkeeper you ever hire. That's a pretty cool concept. And who wants to bet 2-3 years from now, you lose one of your existing bookkeepers? Except now you don't have to replace that person. You replace it with a bot. And how do you replace it with a bot? Well, you don't need to hope to God that another bot is born and that it wants a job. You copy and you paste, which is a really cool thing that bots can do, because that is what allows them to scale. It's going to increase revenue, because if you're spending any of your time doing basic data entry, you're not spending time going out and getting new clients, consulting with clients, selling them on additional services, advising them, providing value that which they then interpret into, this is why I like you, why you're different, why I should continue to give you my money. You'll increase the happiness. It's going to give you the ability to quasi-retire. So an example here is, who here thinks well, in a weird way, accountants are the only people that I've ever met that think the way you retire, you exit your business, is to just shut your business down. Pretty much all other fields, everyone I've ever met, when they think about retiring or exiting, it always involves a sale. Accountants are the only individuals that ever think an exit can simply mean I wind down my business and I walk away. Now, why is that such a crazy concept? Because you have all this value, and then you're taking away value, and you're diminishing it, and then you're saying, once it gets down to no value, and I've purposefully sabotaged and ruined my business and sunk it, at that point, I get to do retirement. When what you could do is you could say, here's a perfectly good business, take it for this much money, now I get to do retirement, big and fun, in Vegas, versus in my backyard. So what Botkeeper, or what AI lets you do, is you can roll out or implement AI in your practice. And what's great is if you automate away your job, and if your job is bookkeeping, right? Like if you're doing tax, advisory, consulting, audit, any of those things, sorry, we can't automate that away. I do know MindBridge is automating away audit, so making the right steps in the right direction. What's cool is you can start automating away the role that you're currently doing, such that you can be on a beach somewhere drinking a colada or some other tropical non-alcoholic fruit drink, and in the interim, your client is being serviced and the data is being entered and processed, and they think you're amazing, like you work around the clock, because that data gets entered every hour of every minute of every day of every night on an ongoing basis, and it's more accurate than it was ever entered before, and it's snappier, and with all that data, it automatically generates these cool reports. Like my accountant, it went from being a great accountant to being an accountant hero, and little do they know, you're sitting in a beach chair, relaxing, enjoying a pina colada. So what's cool is we've actually seen people basically use AI to retire. So rather than sell their practice, They generate recurring revenue on an ongoing basis. And what do all of you in this room have that's like probably one of the most valuable things? A network. So when your friends and family and your network of individuals that know you think of you, what do they think? That person's really good with numbers, and they make sure Uncle Sam doesn't put me in jail. Why is that important? Because they always will think about you, no matter what. Like, you can change jobs, you can be like, I'm not doing accounting anymore, I'm gonna be in software, and you're still gonna have family members come to you and be like, could you do my taxes, and da da da, and you're like, oh, I told you I don't do this anymore. But why is that valuable? Well, that means every single time that person comes to you and it says, hey, can you do this for me, do my bookkeeping? Guess what you get to do? Instead of saying, I retired and I'm enjoying my time on a beach and spending time with family, you get to say, yes, I'll happily do that for you. I work around the clock. All my clients are super happy, super accurate, super reporting, and I'm gonna be like so dedicated to your customer service. Plug in AI, oh, it's doing its thing, go to the beach. That increases the value of your practice, so when you do go to sell it, the acquirer goes, wow, this is really cool. If Tom were to leave his firm, hit by a bus, retire, exit, sell, the business doesn't shut off. It runs. And it runs without Tom. That's super value. That gives you another multiple on the valuation of your firm. Like literally you go from making like 1x revenue to 2 or 3 or 4x revenue the second you can walk away from your firm, and it will run and operate without you. So it's really like this idea of automating yourself away is not a scary thing. It's actually the way you make the most money possible. Who loves money? Who loves riding jet skis? Money buys jet skis. So what should you automate? Categorizations, classifications, basic data entry, bookkeeping, things that don't involve a lot of critical thinking, because AI is not good at being a replacement for really a human. And what are humans? Critical thinkers, problem solvers. They interact, they have personalities. What is AI good at replacing? A bot or a drone or someone with no personality that sits there and goes like this. So don't avoid them, embrace them, implement them in your business. But let's level set here. AI and bots are not perfect. So similar to how you have to train and manage an employee, you have to train and manage a bot. Except that employee, when you taught it 5 things on day 1, 6 months from now, if you asked it what those 5 things were, that employee would be like, I don't know, what are you talking about? The bot would spit back all 5 things. So it's not going to be perfect, but it's going to learn, and more importantly, it's going to remember perfectly. So spend the time training, teaching, handing over the work, understanding that it will make mistakes the same way a human does. Why do bots make, can anyone guess why bots make mistakes? Because humans program them, and humans make mistakes, and humans forget to program them what not to do, or what not to do when, and they will jump to a conclusion of like, oh, do this thing always and forever. They start implementing RPA on AI, and AI is like, I don't believe you, it's not always and forever, something's gonna change, but you don't tell it what, so it doesn't know what to do, and then it just becomes as dumb as RPA.